Alright, going on with Trade-Off by Korowich. Referring to Bar-Yam's quote at the top of this section, the survival of the sheep depends upon which part and how much of the animal is damaged. The financial system, because it links almost everything in the economy, could be compared with the heart or lungs. We also need to consider the potential scale of damage and the ability of the animal to absorb that damage. Thus, a healthy sheep could survive a shock that a weakened animal might not. Consider the default of Argentina on its sovereign debt a decade ago. It happens. In the most general terms, the potential cascading effects on the global economy were dependent upon the size of the default relative to the global economy, the relative importance of Argentina's economy, and confidence within the globalized economy. The world economy easily absorbed the impact. Indeed, this was not the first time that Argentina and countries of similar size had defaulted. With its newly devalued and competitive currency, it could re-equilibrate with the stable surround of a strong, confident, globalized economy and soon return to growth. What if Ireland followed Argentina's example and defaulted, as some commentators have suggested it should? First, there is the huge complexity and uncertainty of being in the euro. But for the moment, however, let us assume a new punt is introduced without a hitch. This is an imaginative exercise, with the hope that the devalued punt would allow renewed growth in exports. However, now there is much reduced resilience within the globalized economy. There is more debt in the system than 4 years ago, 2008, and confidence in central banks and government's ability to handle this situation is almost gone. Today, who believes the government's about anything? That is, Ireland is far more tightly coupled to the very much weakened heart of the globalized financial system. The resilience within the global economy is so reduced that the nudge that is Ireland's default could cause the whole system to cross a tipping point, causing cascading failure that would devastate the globalized financial system. Ireland could not re-equilibrate with what was falling apart. The stress within the globalized economy arose out of its internal dynamics. However, even if we were to restore and invigorate global growth, we would still be on the edge of an environmental constraint with profound implications. That constraint would expose in an even starker manner the inherent instability of the global financial system. There is an acknowledged risk that we are now at the peak of global oil production. That is, the amount of affordable oil that can be brought on stream in real time is hitting constraints and will decline. Economic and complexity growth are predicated on rising and adaptive energy flows. Constraints on energy flows that cannot be substituted affordably, adaptively, and in real time are expressed through constraints on economic activity. If the global economy cannot grow and starts to contract, feedback processes drive further contraction. A contracting economy is incompatible with the credit backing of the globalized economy and the value of all financial assets because it undermines the ability to service debt in real terms. Monetary stability, bank solvency, intermediation, and credit are all dependent upon confidence in continuing credit expansion and rising economic activity. That is, the financial and monetary systems that we have come to take for granted were adaptive within a particular set of conditions. When those conditions change, the financial and monetary system keystone hubs may slip out of its historic equilibriums. Generally, we tend to assume that change is gradual. A dependent condition changes and the system responds proportionally. Our assumption of gradual change tends to imagine that the effects of economic contraction, we are in a recession, but probably the global depression right now. Our assumption of gradual change tends to imagine that the effects of economic contraction, debt deflation, climate change, energy depletion, or biodiversity loss will gradually grind us down, snipping away at our wealth and welfare over years or decades. This may be so. However, all those changing conditions need to do is drive the globalized economy or keystone hubs within it out of their stability domain, after which the system's internal interdependencies come out of sync with what they have adapted to, and the system can be at a risk of collapse. The speed of that collapse is related to the levels of integration and complexity in the system. One of the effects of massive credit overexpansion and/or the peaking of global oil production is the growing risk of a global systemic financial shock. The likelihood, as with so many financial crises of the past, is that the breakdown of the global financial system will be sudden and catastrophic, marked by complacency and hope turning to fear and panic. It would happen over hours or days.